Imagine that you are looking at the price movement of an asset on a chart. The way you visualize this price history depends on the time frame you have chosen. The time frame, or unit of time, is the period that each candle or candlestick represents on your chart. In other words, it determines the granularity with which you observe price movements. For example, on a monthly time frame, each candle represents the price change over a period of 1 month. This means that a single candle aggregates all the quotation data over 30 days. In contrast, a minute time frame displays a candle for each minute that has passed. Metatrader offers a wide range of time frames ranging from 1 minute to 1 month, including broader intervals like 4 hours and weekly. The choice of time frame depends on several factors in your trading style and your goals. For the scalper generally favors shorter time frames to take advantage of small, rapid price movements. The day trader typically operates on longer time frames to analyze more established trends. The swing trader positions themselves on longer-term price movements, several hours to several days, and uses daily, weekly, or even monthly time frames. Investors have an even longer-term perspective and may use monthly or quarterly time frames. It is important to test different time frames to find the one that best matches your trading approach and risk tolerance. Use multiple time frames for a more comprehensive analysis. Remember that you are not limited to a single time frame. You can use multiple time frames simultaneously to gain a more complete view of the market. For example, you can analyze the overall trend on a weekly time frame, then refine your analysis on a daily time frame to identify potential entry and exit points. Using multiple time frames allows you to confirm your signals and reduce the risk of making decisions based on random price movements. So, to conclude, the time frame is a fundamental concept in trading. By understanding how it works and choosing the time frames suited to your trading style, you will be better equipped to make informed decisions and increase your chances of success. Remember that practice is essential to mastering the use of time frames. Open a demo account. Experiment with different time frames to find the ones that suit you best. Or, in different strategies, we have multi-time frame strategies with TK Boss that you will see as we progress a bit with the video. Well, I still invite you to my Metatrader 5 to see how time frames work on Metatrader 5. Here we are on our chart, for example. This inner candle represents the inner history of the price movement. I will take a reference point, for example. You see, from the opening of this candle to here, it represents 1 hour. And when I go down to M30, you see that in this space, there are now several candles. There are still candles 1, 2, 3, 4, 5. In 1, 2, 3, 4, it's about 1 hour. 15 minutes times 4 is 1 hour. On M5, you will see there are several. And on M1, I believe we will have several candles. It will be more than 60 because it's the gap of 1 hour. So, on M1, as I said, there is one candle that represents 1 minute, 1 minute. For scalpers, they can use the 1 minute to clearly see the markets and then take advantage of each movement to make a profit. You can, for example. Also, being on M5 is still scalping, but sometimes the multi-time frame helps us see the overall trend. For example, if I am on H1, we can clearly see here that we are in a bearish trend. So, overall, we are in a bearish trend. Maybe on M1, you will see that, for example here, you might think you are in a bullish trend. You risk starting to take positions based on this bullish trend. But if you don't take a look at, for example, a higher time frame, I give the example of a person who is here. In this space on M1, one might think we are already in a bullish trend. At one moment, we think we are in a bullish beam 1 trend. But if we try, for example, to take a look at slightly higher time frames, we realize that we are in a bearish trend. These are just reversals. It's good to analyze multiple time frames. Sometimes you can be on a case to see it in its entirety to have a broader view. When you have a broader view, you can then go down to smaller time frames like M1 or M5 to make entries. So we have time frames that go up to a off month. In one candle, it's a month. The time frame of a week in one candle is a week, 1 week, and 1 day in one candle. But especially at the beginning, do not try to take your positions based on M1 and H4 because one candle is 1 day. Otherwise, your losses or gains might really be poorly controlled. I rather suggest small time frames like H4 and H1 to see the overall trend and understand the market. Then, I go down to M15. It depends on the strategy. Some strategies are based on M15, others are based on M5 and M1. So, I believe that's it about time frames in trading. And especially if there are words you do not understand so far, don't worry. The part where we will talk about the strategy will facilitate everything. It's theoretical. So, when we enter the chapter on practice regarding the real strategy, you will now really understand the time frames we use like this. The pipes, it's like this. The candle, it's like this. So, thank you very much and keep progressing with the training.